Welcome everyone. This video explains completion of the Form 8962, the form on which the premium tax credit is reconciled and or calculated. We'll also go over the ACA worksheet a little bit. It's primarily addressed though in the video on exemptions, the Form 8965. So please do look at that video. Also keep in mind that in order to prepare this form, the 8962, you must be advanced certified. Looking at the ACA worksheet, which is titled ACA Page 1 and 2 in your tree, when you answer the first question on this worksheet, did anyone purchase insurance through the marketplace? Answer yes to that, and TaxWise will automatically load a Form 8962 in your tree. I want to point out here this first section at the top where it asks about if you're applying for relief. As you know, when you file a married filing separately return, you're not eligible for the premium tax credit. There is an exception, however, for survivors of domestic violence or those who experience some type of coercion. They can file a separate return from their spouse and still be eligible for the premium tax credit. So if your client happens to fall in one of those categories, this is the box you will check. Notice here on line 2B is where dependent income is entered. It doesn't state so on the form itself, but the dependent income is entered only if the dependent is required to file a tax return. So if the dependent files a return simply to get a refund of their withholding, but they don't meet the filing threshold, then you do not need to enter dependent income on line 2B. This is only for those dependents who have a filing requirement. TaxWise also defaults, when you first open this form, it defaults the household income, the percentage of federal poverty line, as 401%. When you check the state of residence for the taxpayer, it then calculates their FPL amount based on their annual income, based on their AGI. So you will see here that Ms. Test is at 117%. If a person is over 400% of the federal poverty level, they are not eligible for the premium tax credit. If they received it, then they will have to repay the credit, the advanced credit that they received. There are a couple of exceptions to being under 100% or of federal poverty level. If this figure had been under 100%, then you would need to answer these questions here in number 6. The two exceptions are for aliens who are lawfully present in the U.S. They, when someone enters the country lawfully for the first 5 years of their presence, they're not eligible for Medicaid. However, they are entitled to purchase health insurance through the marketplace and receive the premium tax credit. That's one exception. The second exception is if their household income was above 100% of the federal poverty level at the time they enrolled in insurance through the marketplace. The marketplace does a lot of vetting. They do income verification prior to permitting someone to enroll through the marketplace. So if someone has enrolled and received advanced premium tax credit, even though their income falls below the 100% at the time they're filing their taxes, we can pretty certainly check this box as yes, because at the time they were estimated and they were determined that they were going to fall above the 100% mark. In part two, the question number 9 asks about shared policies or alternative calculation for year of marriage. A shared policy allocation indicates that there's a Form 1095A, which has persons on it that are not all on the same tax return. Or there may be two 1095As covering the same. In other words, there's one insurance policy that covers people who are on different tax returns. Those returns and that calculation is out of scope for VITA. Also, if a couple marries during the tax year and one of them or both of them purchased insurance through the marketplace, there is an alternative calculation that could either lower the amount of tax they owe or increase their refund. If they choose to do that alternative calculation, that is also out of scope for VITA. They don't have to do it, so if they're willing to have us prepare the return without trying the alternative calculation, that is their choice. But you should advise your client that there's the potential it could change what they owe or the amount of their refund. For our purposes, the answer to number 9 will be no. And then number 10 asks whether the amounts on the Form 1095A were the same during all 12 months of the year, or if there was some variation on the form. We have here the 1095A that Linda Test received. You will notice that her coverage started August 25th of 2015. This is because early on in the tax year, she tells you that she had employer-based coverage. She lost her job. She was without health insurance for the months of June and July, and then in August, she enrolled through the marketplace. If you have coverage through the marketplace or any health insurance for only even just one day of the month, you are considered covered for the entire month under the Affordable Care Act. So because her coverage started August 25th, Linda is considered fully covered with health insurance for the entire month of August. Then you will see here that on her 1095A, we have the amounts filled in for her monthly premium, the second lowest cost silver plan in the marketplace, and then her advanced premium tax credit. Because these all 12 months are not the same, then for this question number 10, our response is going to be no. And you will fill out all of these columns down below. Were they all the same, you would fill in the annual totals from the 1095A on line 11. In this particular case, we're going to fill in Miss Tess' amount in columns A and B, the premium amount, the second lowest cost silver plan, tax-wise calculates and populates columns C, D, and E, and then you will enter the advanced premium tax credit in column F. And again, these figures are coming from the Form 1095A, and you just enter the numbers on this form. And I'm almost finished here. All right, so we scroll down and you'll see that Ms. Test is entitled to an additional premium tax credit of $415. So her refund will be increased by $415. Now we do have the 2 months that she was without insurance, June and July. So in order to claim that exemption on the tax return, she'll need to fill out the Form 8965. You check yes to the second question on the ACA worksheet, and tax-wise will then, oops, let me see, will then pull up, okay, let me get this over here so you can see it. We'll then pull up the 8965 for you. These three radio button questions here are to determine whether the client, the taxpayer, had insurance or an exemption for the entire year, for part of the year, or had neither insurance nor an exemption for any part of the year. We're going to check the first radio button because Ms. Tess did have either coverage or an exemption for the entire year. We go to the 8965, and once again you'll see where TaxWise populates household income and gross income for you, so you can easily see whether your client might be eligible for one of these filing threshold exemptions. Ms. Tess does not. She's applying for the short coverage exemption because she was without insurance for just the 2 months of June and July. So you will fill in her information there, her name and social. It's exemption type B, and the exemption codes are in your publication 4012 on page ACA 6. As it's written right now, not all of the exemptions are in there, but I'm sure we will be getting an update for that exemption page before the filing season starts. Were she applying for an exemption for the full year, you would check the full year box. But she's claiming the exemption for the months of June and July. Just to do a check to make sure that everything seems to add up correctly, I like to go back and check the ACA Page 2 sheet because this is where any individual shared responsibility payment is calculated. Ms. Test should not have one because, again, she had an exemption or coverage for the entire year. You will see here that there is no penalty being assessed against her. So you've completed the return correctly. Thank you.